Hey traders, welcome back to the weekly Forex Forecast. This week is a monster week. We've got 5 interest rate decisions coming up, and in today's video, I'm going to show you the watch list and the setups that I'm going to be using to navigate all 5 of those interest rate decisions next week. Last week was an interesting week because we were looking at short US dollar setups as one of the themes in last week's video. And it was after the CPI report that was highlighted on Tuesday. And the CPI report came out. And although it was hot across the board, it did provide the opportunity to fade the initial dollar move. The initial dollar rally, you could step in, fade it, obviously, against any currency. I chose during the week to use pound dollar. This was a setup I highlighted in last week's video. And that was the setup that I took and shared with members in the week. And then later on in the week, interestingly as well, we had PPI out of the US also coming out hotter than expected. And I was actually looking to short the dollar again and fade it from this. However, it came out and the market reacted very differently. And in fact, we saw sustained US dollar buying, and also we saw risk indicators like the VIX spiking and then holding its strength. And this really showed that the market took the PPI report later on in the week much worse than the CPI report. And I actually chose to sidestep the PPI setups later on in the week because of that. Now, the reason I say last week was interesting was because we finished the week with an inside week in the dollar. And this is what I wanted to show you. And the reason this is interesting is because it shows a real lack of volatility. It shows that there's really no money coming into the dollar, for buyers or sellers, despite that double inflation report, with the CPI and then later on in the PPI in the week. So why is that? Why is such a lack of volatility? And bear in mind, when you get an inside week in the US dollar, when the US dollar doesn't move, you tend to see a lack of volatility across the board in Forex. It's not just the US dollar, it tends to be all the dollar pairs. And that was the case last week. There were less opportunities in the Forex complex because of this. Now, why was that? Well, even though we had the inflation data coming out last week, we have the Federal Reserve coming up on Wednesday. And this is what the US dollar pairs are now waiting for. And this is the key thing we have to pay attention to heading into next week. Before the Fed on Tuesday, we do have the RBA and also the BOJ, and that's also set to be a big meeting on Tuesday. And then later on in the week on Thursday, we have the SMB and the Bank of England. Like I said, I'm going to talk you through how I'm going to be looking at sidestepping these as much as possible and navigating them in today's video. The final thing to note is it's not just Forex that we're using the hedge dash trading system with, it's also stocks as well. And WBD, as an example, was a good setup shared with members last week. So if you're interested in learning this stuff, feel free to join us in the week as well. Okay, so moving on to the market selection part. So this is the part where we're building the watch list and deciding what to trade, but also kind of when to trade. Because when we look at the news, the reason I share those key pieces of data with you in the weekly Forex Forecast videos when they are appearing during a week like this week, is that the economic calendar, or the big news events, not the minor news events, but the big ones, the CPIs, especially out of the US, with an inflationary regime recently, but especially the interest rate decisions and press conferences, they really show us when to trade, because before those, we tend to see a lack of volatility. And then after those, and especially during those, we tend to see an expansion of volatility. So a contraction of volatility beforehand and an expansion after. And of course, none more so than the US dollar and the US events, such as the Federal Reserve. So when putting together a plan for next week, I asked myself the question, obviously, first and foremost, which assets are setting up, the best in order to trade against each other. But how can we kind of put those into some set plays, at certain times of the week? Well, we know going into next week, we've got the RBA and the BOJ on Tuesday. So I am going to be looking at Australian dollar pairs to the upside. I want to be looking at those. And also we can look at some Japanese yen pairs. Now, the Japanese yen is actually negative and getting stronger. And that means I have a weak bearish bias on it, essentially. In other words, it's bearish, but it's getting stronger. So it's actually moving towards the positive side of the scorecards here. So in terms of outright assets that I'm looking to trade directionally, before looking at the events that are coming up and how we can kind of sidestep them, I am going to be looking at pound dollar to the upside, pound CAD to the upside, and we could also look at pound franc to the upside as another play. And you could also look at even pound New Zealand to the upside as well. I'm going to avoid the yen short trades. And in fact, there are a couple of trades because coming up on Tuesday, the Bank of Japan is rumored to be looking to exit its negative interest rate regime. Now, it could disappoint and this could see things go the other way. However, based on what we're seeing here and based on those rumors, I would personally rather be long Japanese yen or do nothing next week. And if I'm going to be long a currency which is kind of bearish to neutral, then I want to be long that against some of the weaker ones. So you can look at US dollar yen, but we do have a double interest rate decision, so that becomes a little bit more difficult. You know, maybe look at that after the Federal Reserve on Wednesday we can do. But also I'll be looking at, you know, CAD yen to the downside. And you could even look at a commodity currency like New Zealand yen. So we'll look at a couple of yen long plays after Tuesday. So I'm going to wait until after Tuesday to trade the yen pairs. So if we take it from the top, I'm going to be looking at next week pound dollar to the upside, pound CAD to the upside, pound franc to the upside. I'm also going to be looking at euro dollar to the upside, euro CAD to the upside, euro franc to the upside. And I'm also going to be looking at Aussie dollar to the upside, Aussie CAD to the upside, Aussie franc to the upside. And the final setups that we're going to look at in today's video are going to be US dollar yen to the downside, CAD yen to the downside, and New Zealand yen to the downside. And what that does is that actually gives us a nice balance of risk on and risk off setups that we can play next week. And we can be reactive depending on which one's set up, rather than trying to predict, you know, whether next week is going to be risk on or risk off with 5 different interest rate decisions, which, you know, can affect all of these markets. Now, as we go through these charts, I'm going to be telling you chart by chart what times I would like to see these setup materialize and why. You know, for example, Japanese yen pairs after Tuesday, or the Australian dollar after Tuesday, as we've been discussing. Okay, so going through the watch list this week, starting with crude oil. I always look at crude oil, and this is a market that I am looking at potential opportunities in next week. And what I'd like to see is I'd like to see crude oil below the 77.78. If this market pulls back, because it's kind of neutral, but on balance, I'm looking to be a buyer. And so if this market pulls back and it breaches the 77.78, very similar to what I showed you earlier in the video with the pound US dollar setup last week that I shared with members, it pulls back, tests prior lows over here in the 4 hours. This is going to be a great place between the 77, 78 and this low down here to start to look for 1 or 2 day reversal in crude oil to the upside. For those of you who like to trade intra-week, you may get the intra-week breakout. Usually you get one pullback and then a follow through into the upper bound. That tends to be pretty much all you get. Sometimes you'll get 2, but usually you just get 1. So I do like crude oil, and I'd like to see it below the lower bound for me to get involved with it next week. The first Forex pair I'm going to look at is pound dollar. Now, I only want to be looking at buying opportunities in pound dollar. I do not want to be shorting this. Now, pound dollar has the Federal Reserve on the Wednesday, but it's late on the Wednesday. It's Wednesday evening. So really, with the US dollar pairs, we've got pretty much between Monday and Wednesday evening, so 3 trading days. So if I can get involved with this before, you know, on kind of Monday or Tuesday, that would be perfect, so I can try and capture 1 or 2 days before the Federal Reserve and the BOE on Thursday. And I'd rather just be in and out of this by Thursday and Wednesday, given the opportunity. So if this market pulls back, the primary setup I'm looking for, if this pulls back, tests the lower bound before, you know, Wednesday on, let's say, Monday, or even on Tuesday. If we breach the lower bound and we test this low, the good thing about this setup is I do think there's a good chance of us reversing back above here for 1 or 2 days before FOMC and the BOE. Why? Because it's unlikely this asset is going to find serious direction before those interest rate decisions. You know, most traders are not going to want to put money in before that. So if we do breach the lower bound, especially if we test this low, this is going to be a great place before Wednesday and Thursday to look for a 1 or 2 day reversal. And the second thing you can look at for this pair is if you don't get the opportunity, you know, before kind of Wednesday and Thursday, and I wouldn't bother intra-week trading this because it's probably going to chop around. But if this asset kind of holds off and does nothing, you know, maybe on Wednesday and then Thursday with the pound interest rate decision, you get the opportunity to buy it from the lower bound if it tests this. That is an opportunity that you could fade as long as you don't get a very, very negative, you know, reaction from the central banks. And if they come out on Thursday, the Bank of England just, and this is, you know, if nothing has happened into Thursday, if the Bank of England just simply, you know, come out with consensus, then, you know, this setup would still be in play. If you get a very weak sell-off in the pound on Thursday, you can look towards the second lower bound, the 1.2530. You know, hypothetically, you know, if the Bank of England came out and cut rates or something that was unexpected, then you could probably look at the second lower bound instead. But primarily, I'm looking for that pre-Wednesday, Thursday test of the lower bound for a 1 or 2 day rally to the upside. Next is pound CAD. Now, pound CAD is a market that I'm looking to be a buyer of or do nothing. I cannot sell this market next week. And of course, with the Bank of England being on the Thursday, you know, pound dollar is a little bit more tricky because we've got the Wednesday and the Thursday interest rate decisions on both days. Hence why I'd rather just get involved early on. But the same is kind of true with pound CAD. Because we have the Bank of England on Thursday, it's unlikely the pound pairs, unless they've got a dollar or a yen or an Aussie in them, it's unlikely any of the other pound pairs are going to do much before Thursday. So that is quite a good setup in and of itself, because if we get a pullback and we breach the 1.7131, especially if we test this low, maybe we push through and test this low, but between these two lows here, if we breach here, we become oversold on the week. And that gives us roughly a 70% chance of reversing for a day or two to the upside. That's the setup I'd like to see in pound CAD next week. It may be difficult to trade intra-week because Bank of England on Thursday, this might just chop around and pretty much range into Thursday. And the final pound pair we're going to look at is pound franc. Now, this actually sets up quite a good opportunity because both the SNB and the Bank of England are on Thursday. So with both interest rate decisions late on in the week, it essentially gives us 1, 2, 3, 4 days, you know, more or less between 3 and 4 days, where this market is unlikely to find any significant direction, not just because of one of the currencies with an interest rate decision, but 2 of them on that day. So this market is very likely to chop and range, which means that if we can get this to pull back and test the 1.1176, there's a really nice low over here. So we breach this, not just test it, but breach it. We become oversold on the week, anywhere between kind of Monday and Thursday. There's a very, very good chance that this will snap back for 1 or 2 days back into the range because of the double interest rate decision on Thursday. I don't want to be holding this through Thursday. Could get very, very volatile on Thursday. But we could use that to our advantage if we get a test of the lower bound early on in the week. I can either buy this or do nothing. I cannot sell this from the upper bound next week. Moving on to the euro pair, starting with euro dollar. Now, this is very similar to pound dollar, except it doesn't have the interest rate decision on Thursday, which complicates things. But because the euro makes up 57% of the dollar index, essentially, you know, the euro kind of has an interest rate decision at the same time, you know, when the Fed meet. So looking at this next week, I really like a similar setup to the pound in the sense that I can only be a buyer of this or do nothing next week. If it blasts lower and I buy it somewhere down here and it pulls back a bit and we get, you know, risk off coming in, then I can reverse that in the following week. But this coming week, I can only be a buyer or do nothing. So what I'd like to see is, I'd like to see this come down, breach the 1.0808 early in the week, maybe Monday or Tuesday. That would give me 1 or 2 days before Wednesday's late in the evening Fed meeting to look for a reversal. I'm just trying to capture, you know, 1 or 2 days worth of volatility. Even if we get a really good intraday move, you know, that's enough for me to get out of this just with a solid update. So if we get that set up, you know, early in the week, that's what I'll be looking for. Now, alternatively, we may not get anything. You may just do this, okay, during the week itself, in which case I'm left with 2 options. I'm going to have to wait for the Federal Reserve meeting itself and then trade after the event. If we get the Federal Reserve coming out and they're pretty much as expected, there's no real surprises, then I would be looking for a test of the lower bound and 1 or 2 days reversal to the upside, you know, Thursday, Friday. If we get a very weak euro or a very strong dollar, which is going to be most likely the case, but then a weaker euro because of that, and we see this blast through, in other words, we get a very hawkish catalyst in the meeting itself, then I would look at potentially buying this from the 1.07370, you know, breach of this. Because once we test this, even with a catalyst, you still have usually a 95% chance of pausing or reversing. So within the week, and these will refresh, of course, for the following week. So if we do test this level, I would be looking down here on a very weak euro dollar after the Fed meeting. And of course, if you get the third option, you know, a neutral reaction, a very bullish dollar, or you get a very bearish dollar, then of course you can look afterwards at that follow-through trade, which very often you get after these meetings as well into, I would say we'd probably come up to the high at the 1.0965 or just above. So you've got the neutral setup from the meeting. This is post Fed. You've got the hawkish setup, and you've got the dovish setup where we get a weaker dollar. So those are the three setups I'd be looking for post FOMC on Wednesday. Primarily though, I'd like to be involved from the lower bound before and out and just done by the time Federal Reserve rolls around, but we can't always do that, unfortunately. Next is EurCad. Now I can either be a buyer or do nothing. I can't short this market next week. So what I'd like to see is I'm essentially almost treating this euro here like the interest rate decision on Wednesday from the Federal Reserve, because we're probably going to see volatility across the board. You know, if the Federal Reserve does cause some moves in the US dollar, then this is going to spread even to EurCad. You know, if the dollar rallies and it's risk off, you tend to see, you know, EurCad pushing up. So what I'd like to see is going into next week, I'd like to see this market pull back before Wednesday, especially if we test these lows here, or we breach, even better, we breach the 1.4654, test this low. This is going to be a great place pre-Wednesday to look for a 1 or 2 day reversal. So if we get this on Monday or Tuesday. If we go into the interest rate decision itself, and we're just kind of chopping around, but we haven't tested the lower bound, then if we get a kind of as expected or neutral interest rate decision from the Federal Reserve, again, you can look to buy from the lower bound. That's what I'm going to be doing. If we get a very risk off, so we get risk off, I've put to the upside because risk off outcome from FOMC would see euro rallying against CAD. Then you can look for a breakout, you know, intra-week. If it doesn't come down, we get risk off and this breaks forwards. You get that pullback and then you get that follow through. It tends to be one follow through into the upper bound at the 1.4837. And if we get risk on, in other words, we get, you know, risk assets, you know, stocks rally and everything from the FOMC, then you may find that this actually sells off quite hard if there's volatility. And in this situation, you can look at a potential fading opportunity, especially as we trade into these highs here from the 1.4563. So again, I've given you three outcomes here that you can look for. A neutral, or even better, an opportunity before the interest rate decision from the lower bound. If you get EurCad blasting higher like this on the event itself, you can look for the pullback and a follow through. And if it sells off hard through the lower bound, because, you know, you've got a very risk-on result from the interest rate decision, then you could look at the 1.45630 as the next port of call for a buying opportunity. Now, you might say, well, what happens if I get involved here? And this is something we do every single week, week in, week out with members. I do myself in real time to show them. You might say to me, if we sell off through here and I've bought and it goes all the way down, you know, what do I do in this situation? Well, what I personally do is I usually add a second position here. I cost average it, you know, if I am involved around here and I'm wrong. And as this bounces, I tend to exit this for break even. And that is actually something, those scratch trades are something we do quite a lot. And in fact, you know, scratching losing trades instead of holding on to them will make a massive benefit to your P&L over the course of the quarter of the year. And the final euro pair is euro franc. Now we're trending to the upside here. I can either buy this or do nothing. With the Swiss National Bank on Thursday, you know, this does become a bit of a tricky one, and it means that what I really want to see is I want to see a sell-off Monday or Tuesday, a test of these lows, a breach of the 0.9564, and if I can get that, that's going to give an opportunity for 1 or 2 days up into Wednesday evening. That's preferably what I want to see. If we get the interest rate decision on Wednesday, the difficulty is, you know, you might get a kind of neutral rate decision on Wednesday. Euro franc tests its lower bound, and then you get a sell-off on Thursday because you've got the SNB that follows. So again, if we breach the lower bound, the easiest way to play this is any breach of the lower bound, I am going to be looking potentially for a buying opportunity. And if you get caught out on the SNB and it pushes it all the way down to the second lower bound, again, you could look at this. If you avoid the first one, this is a good opportunity to step in for 1 or 2 days up. But if you are involved up here, you know, you can cost average this and attempt to get out for break even, as we discussed in the last chart. So euro franc is probably going to be one of the trickier ones to trade next week because of that FOMC and then SNB on Thursday. So unless we get this Monday or Tuesday, this could be a bit tricky coming into the end of the week. Just bear that in mind. Moving on to the Aussie pairs. Now I'm leaving out Aussie dollar here just because with the interest rate decision on Tuesday and then FOMC on Wednesday, it's just too tricky to get involved with. And if you get involved after the RBA, you know, if it doesn't work straight away, you're going to end up holding through FOMC and then you can be on the wrong side of a bigger move. So trying to sidestep the risk as much as possible. In terms of Aussie CAD, I can either buy this or do nothing. What I'd like to see is I'd like to see this mark come down. It's probably going to do nothing. Now, if we get a kind of neutral RBA, I'm going to be looking for a breach of the 0.8820, especially if we can test both of these lows. That would be great. That's going to be the opportunity for 1 or 2 days up. If we get the RBA coming out and they are hawkish and it causes the Australian dollar to rally before testing the lower bound, you can look for the breakout on the news event, followed by the pullback and then the rally into, or the follow through into the upper bound at the 0.8951. And the third one is if we get a weaker Aussie, we get a dovish RBA and it comes down, pushes through the first lower bound and into the second lower bound, maybe through it and test this low. In this area, I'd be looking for, kind of momentum to fade, and then that's the opportunity to step in for 1 or 2 days up. So again, giving you 3 different scenarios here: a neutral rate decision from the lower bound, a hawkish rate decision where the Australian dollar strengthens before testing the lower bound. You can look for the pullback and the follow through. And a weaker or a dovish outcome where we see the Aussie really selling off and testing the 0.8754, I'd be looking at buying here. Now, all of these setups we're looking at, you're not going to get the opportunity to trade every single one, but by having a number of them on our watch list, we can reactively take the ones that do appear and do set up in our favor. Final Aussie pair then is Aussie Franc. Now, with the Australian RBA on Tuesday and the SMB on Thursday, we're kind of sandwiched here, but I can buy this or do nothing. And it's essentially going to be an RBA trade on Tuesday. So if the RBA comes out and it's pretty neutral and we test the lower bound, we pull back below the 0.5748, very much like the CPI last week with pound dollar, that's going to be the opportunity to look for a 1 or 2 day reversal in Aussie Franc to the upside. If we get a hawkish RBA, so that's the neutral scenario, a hawkish RBA, you can look for the breakout to the upside and follow through into the 0.5849. And of course, if we get a very dovish RBA and we get the Australian dollar selling off, taking out this low and breaching the 0.5698, you can look for 1 or 2 days upside from this lower bound as well in that kind of dovish scenario where we see the Aussie very weak. Finishing off with the yen pairs before we move on to gold and silver. Starting with CAD yen, this is a short or do nothing. And what I'd like to see is, I'd like to see this market has to be, of course, after the BOJ on Tuesday. But coming into Tuesday, if we can get, an as expected event, maybe they do lift rates, but it's just kind of as expected and we see an initial spike to the upside, which would be a sell-off in the yen. Initial spike to the upside above the 111.22. This is going to be the place to look for a 1 or 2 day reversal. If we are making our way towards this and instead we get we're looking at this as a kind of a neutral outcome. If instead we get, the exit of negative rates and maybe we get a rally in the yen, so we get a hawkish kind of yen response, and this breaks through like this in the direction we're looking at, you can look for the pullback and the follow through intra-week into the prior low past the 108.89. And in the scenario where we get a disappointment from the BOJ and we could maybe see the yen really sell off, a breach of the second upper bound at the 112.38 in that negative yen scenario would be where I'd be looking for potentially 1 or 2 days down in this asset. But I can either sell this or do nothing. Buying this is not an option for me next week. And the final yen pair we're going to look at is New Zealand yen. Now, you can look at US dollar yen as well, but the difference is that we don't have, the Fed coming up later on in the week with the New Zealand. So I prefer the fact that after Tuesday, I can start looking at this without worrying about a second interest rate decision coming up. So any pullback in this market, if we get a kind of neutral, as expected response, we don't get anything crazy, but we do breach the upper bound, and I really like these highs sitting above here. If we breach this and we trade into these, this is going to be a great place above the 91.70 to start to look for 1 or 2 day reversal. If we get the hawkish yen response and instead of testing the upper bound, we're kind of correcting, consolidating, and then we just get a blast through, you can look for the pullback and a follow through into the 89.63. And if we get the dovish yen outcome and we see, they really disappoint and the market is super disappointed to the point where the yen itself sells off really hard, of course, that would be a rally in New Zealand yen. Especially if we breach the 92.74 and we take out some highs, that would be where I'd start to look for 1 or 2 day reversal to finish the week in New Zealand yen. Wrapping up the video with gold and silver, I can either be buyers of these assets or do nothing. Just bear in mind with the FOMC, we could see these get a bit volatile as well, so you always have to keep that in mind. But any pullback in this market, I'm going to be looking for a breach of the 2119.70. And if we break through here, you can see there's not many lows down here at all. This would have to come all the way down here, which is a bit of a distance. So just any breach of this level is going to be the opportunity to look for a 1 or 2 day reversal to the upside. If for whatever reason, maybe we do get a dovish reaction, from Wednesday and we start to see gold breaking out before testing the lower bound, you can look for that bull flag setup where it pulls back and then follows through into the prior high at the 2192.11. And last but not least, silver. Now, out of gold and silver, if you want to try and avoid the volatility, you would want to go into gold. Silver is the one asset out of those two that can really get volatile. So just bear that in mind again with FOMC next week. But if this market pulls back, breaches the 24.36, especially here, we've got a nice low underneath, and there's two of them here. If we breach the 24.36, we become oversold on the week with a 70% probability, and we test these lows, that's going to be the opportunity to look for a 1 or 2 day reversal to the upside. And if we break out, perhaps on Wednesday, we get the FOMC, a weaker dollar, then you can look for the bull flag follow through setup into the 26.00. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com.